the show. Today we'll be doing a slightly different show. We'll be talking about reading some news articles and seeing how how I read news articles at least. Okay. Today is July 26, 2022. Let me start by saying that I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. So, I've got some rules, which I like to call my rules for investing. There's 12 that are listed here. There's a couple more, which are not. But if we look at rule number 8, it says, listen to the media. They'll usually tell you what not to do. So here's an example from a recent article by Barron's. And it's, what is it? It's dated July 20th, 2022. It's fairly recent, I guess. And it talks about Canoe, and 4 more EV stocks are among the most shorted. GameStop and AMC are too. Okay, so it talks about shorts, and let's read the article a little bit, or let's read a little bit of the article. It says, being squeezed is a fear of any trader brave enough to short stocks, selling borrowed shares in the hopes that the price will fall. If that happens, a short seller can buy the stock back at a lower price and return the borrowed shares. The short seller pockets the difference between where they sold the stock and the price where they bought it back. The problem is shorting can be a tough way to make money. Stocks tend to go up over time, and shorting carries its own risks, including the risk of a squeeze. If too many investors have the same idea and short the same stock, then any good news affecting the stock can send it soaring as bears rush in to close out their positions. That's a squeeze. Interesting article. So the first thing to note is the use of certain language and words. So I have written articles in the past, and I can write an article to be positive, to be negative, to have all sorts of particular connotations to them. Okay. First thing to note is the use of the word brave. Brave indicates that, the trader must be brave to short the stock. He must really be convicted. He must have, superior skills. He must be strong, all that stuff, right? Good qualities. It's good to be brave in general, right? I think I could rewrite this article with the word stupid instead of brave, okay? Being squeezed is a fear any investor stupid enough to short stocks, blah, 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 blah. And instead of if too many investors have the same idea and short the stock and short the same stock, any good news affecting the stock and send it soaring as bears rush in to close out their positions, that's true, and that's a squeeze. Another possibility is that millions of investors invest just a little bit of money to buy and hold forever the stock you shorted in your stupidity, and your moronic position can get overrun. Then you can owe 10x to 100x any potential gains, and kiss your bonuses goodbye forever. See Melvin Capital Closing Doors. See, there are various different ways to write an article. Here I just showed you another possibility. So this is from Barron's, and I subscribe to the Wall Street Journal, so therefore I can get Barron's. But you see, I don't really read the articles at face value. I try to look beyond what the article is trying to say and understand, the true message of the article. And you can also remove spin from the article. But what led me to make this presentation and this set of slides is actually this article. This particular article has gotten a lot of news, or a lot of fame recently in social media. It says, a new bull market can't start until investors give up. Okay? For a new cycle to begin, people who bet on the market need to capitulate. Problem is, they've forgotten what that feels like. And it's from the Wall Street Journal by Spencer Jacob, July 22. Okay. So if we look at the inside, the first paragraph of that article, it says, in order for the stock market to live, Cathie Wood has to die. Whoa. And that's in quotes, of course, right? The Wall Street veteran who uttered those words about the Star Fund manager said he has no ill will, but he said he isn't comfortable betting on a new bull market until the poster child of the last one has had her comeuppance. Despite Ms. Wood's flagship ARK Innovation Exchange traded fund losing more than 3/4 of its value between its peak in February 2021 and last month's nadir, that hasn't exactly happened, and has still pulled in about $2 billion in fresh money so far this year. Likewise, despite billions lost on JPEGs of apes and meme stocks like GameStop, a hard core of believers in bets like these continue to hodl or hold on for dear life, viewing downturns as brief setbacks. Okay. If you haven't heard a lot of spin in that, there's a ton of spin right there. Kathy Wood. Kathy Wood is a female fund manager, hedge fund manager, and one reaction might be, gee, this guy Spencer seems to have a problem with females, being in charge of funds, particularly ones that were successful in the past, and is very, very happy to see them fail, and wants to espouse his misogyny on everyone. But likewise, he'll probably say, no, he's not misogynist. He just hates Kathy Woods. Other female investors are fine, just not ones like her who were very successful in the past. Let's talk about GameStop, and let's talk about what he's saying. He's saying that, the market can't start, a bull market can't start until investors give up, okay? So how much is the stock market worth, right? How much, let's ask Google. What's the market cap of the S&P 500? Google says it's about 40 trillion, right? 40.15 trillion, as a matter of fact. So so the U.S. stock market's worth about 40 trillion, let's just say, okay? So, $40 trillion. Your first reaction should be, at least my reaction would be, wow, these GameStop investors must be pretty powerful. They can move a $40 trillion market. Geez, how much is GameStop, worth? What's the investment there? How much money do these guys have? Well, how much is GameStop? So we don't know how much money the GameStop investors have, of course, but we can tell by seeing how much GameStop, the company, is worth, right? Because they invest, the GameStop investors invested their money in GameStop. How much did they invest? How much is GameStop worth, right? Let's have a look at it. Well, GameStop, according to the Wall Street Journal, which wrote the article, has a stock price of $32.43 today. And if we look at it, their market cap is around $10.35 billion. So $10.35 billion, okay? Moving a $40 trillion market, does that even make sense to you, right? That's 0.025%. That's less than a quarter of a tenth. That's such a tiny fraction. It should have near zero impact on $40 trillion, right? Why should it matter? $10 billion to move a $40 trillion market? That's insane. That doesn't make any sense. The second reaction. Okay. What kind of crack is the Wall Street Journal editorial staff smoking to publish this, right? $10 billion to move a $40 trillion market? Jeez, how's that supposed to happen? Okay, let's see. But let's just say that they're not smoking crack, right? Let's just say that they have something behind their logic in there. What could they possibly mean? Maybe GameStop really could affect the entire stock market, right? That's what that article is saying. The new bull market can't start until investors give up, until these GameStop people leave. Well, let's see. How is this possible? Let's hear what Thomas Peterffy from CEO and founder of Interactive Brokers had to say just about a year ago about GameStop.
The longs repay their margin loans and exercise the calls, their brokers would have been obligated by the rules as they are today to deliver to them 270 million shares, while by only 50 million shares existed. So when the shorts cannot deliver the shares, the broker representing the longs must, by the rules of the system, go into the market and buy the shares at any price, pushing the price into the thousands. So as the price goes higher, the shorts default on the brokers. The brokers now must cover themselves. They push the price further up. So the brokers default on the clearing houses, and you end up with a complete mess that is practically impossible to sort out. So that's what almost happened. To avoid this in the future, the SEC needs to immediately call for reporting of short interest on a daily basis, because they are currently only reported twice a month, And I think they should increase margin requirements on shorts by 1% for every percent of short interest.
So, Thomas Peterffy had some really good comments there, and it turned out he was right. GameStop nearly took down the entire stock market in the past, just a year ago, because somebody had to deliver more shares than existed. An impossible task. And it was all caused by short sellers. It was all caused by these morons who shorted more stock than existed. That's insane. So I have a third reaction then. This would be a natural third reaction, right? Is this still a possibility? Could GameStop still take down the entire S&P 500? And is this why the Wall Street Journal writes an article encouraging people to sell their GameStop position? Maybe it would make sense, to get some GameStop, just in case the entire S&P 500 collapses. At least you'll have something that hasn't collapsed and has probably gone up. An insurance bet, Who knows, right? This would be this is the way I naturally think when I read articles, see headlines, things like that, right? So, let's look at GameStop, right? How much would it cost for an insurance bet? Well, this is the GameStop price since January of 2022. And it's gone up by 50%. It's gone down a little bit by, say, 30%. But overall, since the start of the year, it's down about 1%. That's practically staying flat. That's practically nothing, okay? Negligible. So let's see what, missed opportunity you would have had if you invested in the S&P 500. Oh, look. The S&P 500 is down 16.27%, and the Dow is also down 12.5%. So it turns out that if you invested in GameStop at the start of the year, as opposed to the S&P 500, you would be up about, you'd be up about 15.27%. So GameStop has outperformed the S&P 500 by 15% and outperformed the Dow Jones by 11%. So it wouldn't have cost you anything. In fact, because it outperformed the S&P 500 and then the Dow 30, it seems to be an overall good hedge against an overall market collapse. And everyone's saying the market's going to collapse soon, even the president, right? Maybe it's not a bad idea. It doesn't really cost much. It's outperformed the S&P 500. It's outperformed, the Dow. So, yeah. Doesn't cost you anything. You got a good hedge just in case the entire market collapses, like everyone's been saying it would. So let's look at what the Wall Street Journal has to say about GameStop. Right? When you look up the stock quote in the Wall Street Journal today, this is what you see. And you see a bunch of news articles that are on the bottom. So what do the news articles say? Overall, they're saying that, hey, there was a stock split. They launched an NFT marketplace. But overall, the one trending thing I see across all the news articles here is negativity, right? The mainstream media is adding a lot of negative spin on GameStop. And I suspect the reason for the negative spin is that the problem hasn't gone away. And they are desperate to try to avoid a market crash. Now, you can bet with the mainstream media that maybe they'll be correct. Or you can take a hedge position. You can hedge against their possible failure. They've failed in the past. And just buy some GameStop. This is not financial advice. I'm not a financial advisor. This information is intended for entertainment and educational purposes only. Anyway, so GameStop recently did a stock split, and they announced an NFT marketplace. And how does that change the situation? Well, I've got two videos on the stock split and how that would probably, what's happening about the stock split, and another video about the NFT marketplace. So check out those videos if you want to see what my opinion is on those. I won't be going over that in this video. This video was solely about the mainstream media and how to apply rule number 8, which is listen to the mainstream media, and they'll usually tell you what not to do. But it is July 26th, 2022. I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. Goodbye.